Good evening. I think we should start. I
Yes,
think
sir.
today we have to cover a lot of things.
Yep.
Yeah. So I'm sharing my screen. Hope the presentation is visible.
Yes, sir.
Yes, it's visible.
Okay, fine. Sure. So just a recap, unmet consumer need, ideation, idea screening, concept design testing, prototype and bench scale development, which we discussed yesterday. And today we are going to discuss the most important part, the commercial viability. Because after prototype development, you have muti good idea of the formulations, and hence we can derive at a costing and a tentative net margins and all. Okay. Post that product development and product testing will not take time because for product development, we have discussed in detail yesterday the shelf life stability data and the process for it. So that is done. That can be done very pretty easily. What we will discuss in product development, some scale up rules for pilot plant to main plant, and some universal scale up rules as well, and a specific to ribbon blender, which will be used for millet snack. So, and then your product commercialization and launch. So let's start. So capital asset pricing model. So for MSME, it is used for the following. Basically, project evaluation, go or no go. Should I go ahead with a particular project? Maybe so. It is kind of an investor deciding, looking at the values such as NPV, IRR, EBIT, EBITDA, operating cash flow, operating profit, all those things. Okay. And then he will decide whether he will invest in it or not. Now, leave about the investor. You yourself come to know in the first place that if this particular project or venture I'm starting, any startup, ready to eat millet snack, whatever, juice starter, within how much time or how much span of years I will recover my money? Is it profitable? Okay, now there are some assumptions involved here, but those assumptions should be taken based on market information, whatever you can collect. Yeah. So let's start. Okay. First, we'll start with the terminologies. We will get acquainted with the terminologies which will be required for doing the commercial viability of your project. So first is capital expenditure. That means what? Money is spent to acquire assets. Business lending rate, which is nothing but bank lending rate on debt funding. What is debt funding? Whatever you take from banks or NBFCs, so the interest charged on those loans. Depreciation, systematic allocation of cost of a fixed, which is tangible asset over its useful life. So for example, what is depreciation? If today a value of my car is 10 lakhs, so IDV after or WDV, the written down value after 1 year, if I take 40% depreciation, will be 6 lakhs. Okay. Risk-free rate. The risk-free rate in India is about 7%, which is nothing but the interest or the return which you get on government securities or bonds. A 10-year government security. What is beta? Beta is a riskiness of your project. That means what? A beta is a parameter which is directly connected to your Sensex. For example, when I say beta is 1, that means what? If Sensex drops by 1% or drops by 10%, the value of your stock will drop by 10%. But when I say beta is 2, if the Sensex falls by 10%, the value of the stock will fall by 20%, double. If beta is 0.5, if the Sensex falls by 10%, the value of your stock will fall by 5%. Is this clear? What do you mean by beta?
Yes, sir. Clear.
Fine. Now, amortization is what? Systematic allocation of cost of an intangible assets over its useful life. What is an intangible asset? Tangible assets we know, equipments, okay, grinder, peeler, chiller, whatever. Yeah, ribbon blender, mixer, kettle, FFS machine. What is that? Those are tangible assets. That means which you can see, touch, and feel. What is intangible?
Patents.
Patents,
IPR.
brand,
Would
IPR.
be.
Yes, yes. So if you are using a technology which is patented, then you need to give a royalty to that person, barabar? So that will be an outflow from your statement, cash outflow. Okay, if you're using somebody's brand, then you have to pay loyalty, the brand, whoever brand you are using. Okay. Then discount rate. What is the required rate of return used to calculate the present value of future cash flows? Just get this thing simple is that today's 1 rupee will not be 1 rupee after 1 year. If I take 7% of inflation rate, so what will be the today's 1 rupee after 1 year?
70 paise.
7%. I'm not saying 70%.
Oh, 0.93, 93 paise.
0.93. Barabar? So what we need to do, so anyway, we are doing capital asset pricing model today. We are calculating the values of future cash flows basis today's rates. So we have to factor in this decrease in the value, currency value over the period of time.
Mr. Darshan, can you please mute?
So that is the discount rate. Is it clear? Discount rate.
Yes,
So
sir.
there is a lot of disturbance.
Who is? I think the admin should. Okay, fine. There it is. Yeah. So discount rate is clear.
Sir, would request you please explain it once again.
Okay.
Discount rate.
So discount rate is if 100 rupees today will not be 100 rupees 1 year after. If I take, because the prices are going to increase, there is an inflation rate now. So if a thing, a pen, which I am purchasing today for 100 rupees, if I take 7% inflation after 1 year, since the prices of raw materials have increased, packaging material have increased, the same pen I will not get for 100 rupees. I will get it for 107. You're getting me what I'm saying?
Yes, sir. Yes, sir.
That means otherwise the same 100 rupees have depreciated to 93 rupees.
Yeah.
Okay. So the value has gone down.
So
Okay.
one question.
Yeah.
Why does the inflation has to be there on an increasing pattern only? Why can't it decrease?
See, decreasing can be there. A nice question.
Or
But
deflation.
thing is that inflation is related to your increasing manufacturing capacity. If you're not manufacturing, suppose, or your manufacturing is not increasing, what will happen? The demand for raw material will go down. You're getting me what I'm saying? Demand for raw material goes down, the prices will go down. If that happens, that means there will be less money circulating in the economy. The GDP goes down ultimately. Gross domestic production goes down.
Okay. ठीक है sir.
Okay. See why inflation is increasing? What is the indirect? Because population is increasing. Population increases, your demand increases. That's why Europeans, their inflation is not that much. In fact, their GDP is very less. Why? Because their population is less and it's not increasing at that rate. You're getting me?
Yeah.
So that is one way of looking at it. Then market rate of return. What is market rate of return? Average return investors expect from equity market. Okay. Now, market risk premium or equity risk premium. What it is MRP or ERP. MRP is also max retail price, but here MRP is market risk premium. Or what does that mean? If my risk-free rate is 7%, which is that is the interest which you earn or returns which you get on a government security bond for 10 years, 7% returns. That is my risk-free rate. It is not at all connected to the market. Whether the Sensex goes up or down, you're going to get 7% return. Now, what is the equity risk premium? Is the extra return investor is expecting above that 7%. That means if market rate of return, expected market rate of is 14%, 7% is our risk-free rate, then 14 minus 7, 7 will be the equity risk premium. Okay, which the investor is expecting. Fine, is this clear?
So please explain it one more time.
Equity risk premium means what? Suppose today the risk-free rate in India. What is risk-free rate in India? Is the return which we get on a government bond for 10 years. So today it is around about 6.7 to 7%. That means if I invest in a government security bond for 10 years, I am sure to get a 7% return on it. Is this clear?
Yes, sir.
Yes, sir.
Now the market is moving fast. Now it is unpredictable also. It is not that it is always go up. It will come down also. Barabar? It is related to other geological factors. Okay, and geopolitical factors. Now, if the expected market return is 14%, that means instead of investing in a government security bond, I invest in a stock or do an SIP or whatever, or one-time SIP. And I am getting from the market a 14% return. So what is the difference between the market return and the government security bond return?
7.
14 minus 7.
7%.
7%. That is my equity risk premium, which the investor will already expect. Anybody will expect. Why he will say that I should see ideal thumb rule now. Even when you people do SIPs, when you do SIPs and see at the particular funds, if a particular fund is not giving you a return more than the inflation rate, then you have to stop that SIP and switch to other. You're getting what I'm saying? It's the same as that. Okay. Is this clear?
Yes, sir.
Yes, sir.
Yes, sir.
Now coming to cost of debt. What is cost of debt? If it is simple, the interest levied on the loan given by the bank. Simple. Barabar? Okay. For
Yes.
MSME, it is, I think, 12%. Correct me if I'm wrong. We will use those values during our calculation. Cost of equity, which is return expected by owners, shareholders for investing in the business. Okay? That is cost of equity. Whoever investors who are investing in your business will expect a return. Okay? Cost of capital. Expected return required by the providers or fund. Debt and equity both. That is total cost of capital. That is RD plus RE is equal to cost of capital. You're getting me? RD plus RE, cost of debt plus cost of equity is equal to cost of capital. Bank will not leave its money. It is anyway take some collateral and will take its money from you. Barabar? Now, weighted average cost of capital. This is important. What is weighted average cost of capital? It is weighted cost of all capital sources. You will get this clear when we do the calculations and with the formula. Discounted cash flow. What is discounted cash flow? As I told you right now, present value of future cash flows. That means today's 1 rupee will not be 1 rupee 1 year after.
Yes.
It will become 93 paisa.
Yes.
So that discount rate we use. Now, how we will calculate the discount rate, that also we will see. That is nothing but the WACC which we use. for discount rate calculations. Then we come to NPV, net present value of future cash flows. Net. Why I am saying net? Because I am subtracting initial investment from the discounted cash flow. That is why I am calling it as a net present value. Is this clear?
सर एक बार और बताएं प्लीज.
From where?
No.
Discounted cash flow.
Okay, fine. Now
Okay, sir.
discount.
Sorry to interrupt you, but I think I will try to explain this in a layman terms because most of the guys here are not from the finance field, no?
Please,
I am
please,
well
please,
versed with this concept. So
please.
So, first of all, these are very finance terms. It's okay if you don't understand. I'll explain very slowly and in a very layman terms. First, I want you to focus on the last formula, which is RE equals to RF plus beta into RM minus RF. I'll explain each and every term very easily. Please note it down if you want.
Please,
So
please.
here, RF means it's a risk-free rate of return. What is generally risk-free rate? For suppose sir explained that it's a borrowed funds ka rate of return. That means if you have some money, if you put it in the fixed deposit, you'll anyhow earn some interest rate on it. There is no risk. You're not investing in a share capital or something else. So if it's a 10%, you'll definitely, whatever the market happens, you'll get that 10%. So here there is no risk. So hence it is called as risk-free rate of return. So it's called as RF. Okay. And the next, market rate of return. What is market rate of return? If you invest in the shares or index funds or whatever it is, then that return is called the market rate of return. That is called as RM. So here, what is the difference between RM and RF? In the RF, there is no risk, but in the RM, there is a market risk. Okay, so hence now you know market risk and risk-free rate of return. What is RM minus RF? It's a risk. It's a return that which we have earned more than the risk-free rate of return. Are you getting my point?
Yes.
Just last point, ma'am, if you can explain once again. RM minus RF.
Yeah. See, if you invest in the fixed deposit, you would have gotten 10%, right?
Yes.
So, but if you have invested in some shares or anything, you might have gotten like 20%.
Mm-hmm.
Okay, since you are taking a lot of risk is directly proportional to return. That concept you have to it's a stable concept. Risk is directly proportional to return. So if you're going to invest in the market, since you are taking on the risk, you would have definitely earned more return. So let's say now here the RM equals to 20%. Okay, since RF equals to 10%, what is the return that you have earned more than the risk-free rate of return here in this situation? 10%. So RM minus RF equals to 10%. Okay. So now coming to this formula, why are we multiplying it with the beta? Beta is that symbol. Okay. That beta is the risk. Okay. That is the risk factor. Sir has explained it as the.
Yeah.
Okay.
0.5 means 5%. 1 means 10%.
Sorry?
Beta is something which is directly proportional. Means what? When I say beta, higher the beta, higher is the risk. Lower the beta, lower is the risk.
Yeah. To understand it in simplified terms, you can consider beta as the risk. Okay.
Yeah.
So here RE is it is our expected return on this project.
Yes.
Here the project is our company. Okay.
Yeah.
So this project expected return is equals to risk-free return. This anyhow we are going to invest. This beta is equals to risk factor for this business, for our business. That is something which the finance professionals will decide. Okay. And that is multiplied into the extra return that we are getting. RM minus
market risk premium or equity risk premium. Yeah. Great. Thanks a lot. What's your good name?
My name is Neha Reddy, sir. I'm a chartered accountant.
Thanks a lot. So great. So please guide us when we will be discussing an Excel sheet. I have prepared to the best of my understanding, okay, and to the best of my knowledge. So I will request you to pitch in whenever you see, yes, either we are going in some wrong direction or right direction. Okay, whatever you feel that it should be taken into account while doing the calculation.
Yeah, sure.
Yeah? Great.
I
Sure.
can also explain this WACC, weighted average cost of capital, for an easy
Average
understanding.
cost of, yeah, I have taken the formula here. I think with formula it will be much easier to explain. I think
Yeah, sure.
this is the detailed formula for
Huh.
bank. Yeah. Okay.
Yes.
Now. Okay. So this is done. Now we go to the parameters. Now let's take a small example of a MSAB millet snack product. Pack size is 200 grams. Okay. Debt funding. This guy has taken as 10 lakhs. Equity funding. From in this case, he is investing 10 lakhs himself. And 10 lakhs he is taken from bank. Wherever. Okay. So debt to equity ratio is what? 1 in this case. Barabar? Is this clear? Debt to equity ratio is 1. Okay. Now corporate tax rate I have taken as 25%. Please correct me if I am wrong. Is it 22 or 25, Neha?
Fine. It depends. It varies actually.
Okay, fine.
It's
So I've
true.
taken as a random figure 25. Let it be. Yeah. Bank lending rate for MSME I have taken as 12%. Okay. Risk-free rate in India, which is 7% for 10-year government security or bond. Beta, since this is MSME, I am taken it on a higher side, 1.2 instead of 1. Okay. Expected market rate of return, I have taken as 14%, depending on current scenarios. So what is equity risk premium? The more the investor will earn will be 7. 14 minus this 14 minus 7. Is this clear? The conditions we have taken for a project, MSME project, millet snack. Okay?
Sir, one question.
Yeah,
How
please.
do we expect that market return will be 14% since the stocks value can always go down? In that case, what will we do?
See, market risk, market return, you take an average, na?
Like of the whole basket of securities.
Yeah.
Okay.
Current. I think you can go to the site moneycontrol.com.
Money control. Sure.
You go to moneycontrol.com. There are a lot of things. You can also go to Investopedia
Yeah. Okay.
to find out the terminologies.
Sure.
Yeah. In
Okay,
detail
sir.
with examples.
Yes. Thank you.
Okay, fine.
So one more question. Can you? Yeah. So is there any standard for calculating beta value for a particular project or business field?
No. You take similar companies beta, which is there on Money Control. You take beta, you have to consider beta of a similar company. See, beta is historic. It is calculated on historical data. If a similar snack company, millet company, who has been operating there for 4 years, okay, 4 to 5 years, okay, then they have their all ratios being calculated. So it should be minimum 3 years. Barobar na, Neha?
Okay.
To have all the ratios.
Sir, but will be a listed company, right?
Yeah. That is when you will get the beta of
that's
that.
my question, sir. If they have been operating for some time, beta value or risk value lessen
Yes.
as opposed to someone starting new. You said take the average beta of another company operating in the same space. Suppose they are operating for 3 years or 5 years. Wouldn't their beta risk value have been reduced over time as opposed to a new startup?
Yeah, definitely. So I think the chartered accountant is the best guy to tell you in this case. That's why I've taken beta on the higher side, 1.2. If you think that your business is more risky or, you can take 1.5. Okay, there is no, a standard thumb rule for it. Okay. You're getting me what I'm saying?
Sure.
Okay, fine. So let's see. So this is what I have changed accordingly. So weighted average of depth is 50%. So we got 50% depth funding, 50% equity funding. Now we calculate the cost of debt. What is the cost of debt? After tax cost of debt. I have subtracted the 25% tax from it. Okay. After taking out the tax, this is the interest. So what will be the interest for this? Mota moti 0.75 into 12. How much it is? 9%. Can you please tell me? Is it
Yes,
9%?
yes, it is 9.
And what will be this? 8.47, 8.4 plus 7, 15.4 or 14.4? 8, whatever, 15.4. Is it
Yes,
right?
yes, yes.
Okay, fine. Corporate tax rate I have taken is 25%, and this is the WACC formula. So I think, Neha, you please explain this WACC formula. It will be better.
Sorry, sir, I'm not following.
Can you
Okay,
explain
okay.
WACC?
Yes, yes. Actually, this concept I will explain you with the logic, not with the formula. Weighted average cost of the capital is nothing but, see, let's break it down. Like, it's the weighted average of the cost of capital. What is our capital? It's the money that we invest in, right? So, what are the kinds of the capital that we invest in? It will usually be in the equity and in the debt. So, we are calculating the average of these two rates. Okay, that's an generalized idea. So this E here depicts the equity. We divide it by the debt plus equity, and we divide it by RE. This is the return of the equity.
Multiplied by RE.
Sorry, multiplied by the RE. This is the return of the equity. Plus we are adding. This is generally the average formula. We do not need to
Weighted average
complicate this.
formula.
Yeah. Yeah. And this is the debt divided by debt plus equity into this is the return on debt, and this is 1 minus tax rate. Why do we deduct the 1 minus tax rate? Because usually what happens is uh, while paying the tax, you will get the deduction on the debt, because since you pay the interest, this cost of the capital of the debt will be reduced to the extent of tax amount. So that's
So,
why.
so tax is applied after your interest is taken out.
Yeah.
On the amount.
Since you deduct interest while calculating your business profits, so we are accounting for that here. So hence RD into 1 minus corporate tax rate.
Okay. So don't worry. We are going to do these calculations in an Excel sheet. Yeah. Fine.
Yes. Yeah.
So now I'm going to open that Excel sheet. First, we will go. This is a CAPM model, which I have done for 5 years. There is a amortization schedule. There is a depreciation schedule. And there is also WACC calculation here. And there is a processing cost calculation. First, we will do a processing cost calculation, basically. So what we are manufacturing, what is our product? See, I have taken, I consider the equipments and equipment cost, moti best to my knowledge and my experience. So our is RTE millet snack. Barabar? That is our product. Now, what I am considering here, I am considering 2 ribbon blenders of 500 kg working volume each. So what will be the reaction volume or working volume? 500 into 2. 1 ton. Is this clear? First step.
Yes, sir. Yes, sir.
Take. Batch cycle time for manufacturing and millet mix. When I say batch cycle time, it is empty to empty. Okay? 4 hours. I am operating my company for 12 hours in single shift. 8 to 8, 8 a.m. to 8 p.m. So what will be, how much I will be manufacturing in 12 hours? 4 hours ka batch cycle time, 3 metric tons per day. Okay? 3 metric tons per day. Is it clear till here? Okay? For this, since there are two ribbon blenders, please stop me wherever you are not understanding. Just don't go ahead. Stop me there and there itself. Because this all is related to the calculations. ठीक है?
Sir, where did this 3 come from? Day 1 to 12 जो shift में आपने 3 mention किया है.
3 shift हो गया ना.
There are 4
Oh, okay.
hours. Now,
Understood.
one batch
Understood.
second time
Understood.
is 4 hours.
Three,
There are
समझ
12
three
hours.
batches will be done, right?
So 12 divided
got
by
it.
4. So I will get 3 batches. 4 3s are 12. ठीक है? Now, since there are two ribbon blenders, I've taken two operators and two helpers for two ribbon blenders. So 4 helpers there and 2 helpers to do all the other sundry work, packing and XYZ. Okay? I've taken it on higher side. You please appraise me is I have taken the salary per month salary as 30,000 for an operator and 15,000 for a helper. Okay? That has given me 2,000 per day for operator and 3,000 per day for all the helpers. So the whole shift of 12 hours, total manpower cost is 5,000. How much I am manufacturing? 3,000 kg, 3 tons in a day. And manpower cost is 5,000. So per kg cost is how much? 5,000 divided by 3,000. 1.67. Is it clear?
Yes, sir.
Simple. Barabar? So manpower calculation is clear. Now I go to energy consumed calculation. So how is energy consumed calculation done? Let's see. First of all, tell me, now you have to educate me on this. For millet snack manufacturing, do I need to roast ragi?
Yes.
So then I take roasting temperature as 80 and room temperature as 25. The specific heat I have taken as 1.8 and the mass is 3 tons for a day. So what I am doing here, I am calculating the cost required for heating a 3-ton material. Barabar for 3 batches. So the simple formula is MCP delta T. People might not be knowing this, but anyway, no issues. This is a formula for heat energy calculation. So this much kilocals, this much kilowatt hour. Okay. Then what I have done, I have taken the motors into calculation. The motor of the ribbon blender, the motor of, I have taken one pulverizer. I have taken 5 motors, maybe 2 for 2 ribbon blenders, and 1 for vibro sieve, 1 for your FFS machines also. So I have taken Motamoti 5 motors and 1 pulverizer motor. Pulverizer motor is higher HP, 20 HP. Remaining I have considered as 2 HP. Simple. So their kilowatt hour conversion is this much. That means what I will do, how much, this is total kilowatt hour for the whole day which has been consumed. 3,000 kg has been manufactured using this much kilowatt hour. So what I do, I sum both of this 71 plus 59 divide by 3,000. So that gives me kilowatt hour per kg. Electrical energy consumed.
Sorry, Akshay. What was 1.8 in D8?
Is the specific heat I have considered.
D8.
Here, na?
Yeah, 1.8.
So this is the specific heat, CP, specific heat of the millet powder or ragi powder. Okay. So what I do here, so per kg kilowatt hour. Now you tell me in your industrial area, what is the rate of 1 unit? Is it 10 rupees, 12 rupees, 13 rupees, 14, 15, 7 rupees, whatever it is? Karnataka industrial area में क्या है rate?
For commercial, they are charging around 9 rupees.
Okay.
In
the industrial area?
Industrial. Yeah, sir, in industrial area itself.
Yeah. So I have taken as 9 rupees. So this 1 kilowatt hour is actually unit. So 1 kWh is 1 unit. Is this clear? Okay. So 1 unit rate is what? INR, 9 INR per unit. Okay. Is this clear?
Yes, sir.
So what is my formula then? Okay. Per kg utility costing. These are the units, 0.043 kilowatt hour per kg into 9 plus 0.028342 per kg is the heating cost. I add both of these to get the utility costing, which is 1.135 INR per kg. Mind you, with a capacity of 3000, if you go down on capacity, the processing cost is going to rise because I am dividing by the total manufacturing capacity. Am I clear to you guys? If manufacturing capacity goes down, your processing cost will go up. Simple. If I, instead of this, I use a 2 metric ton. So what will happen? I will divide each unit by 2000. Note, utility costing is 1.135. See, it has gone up 1.3 from 1.13.
Economies of scale.
Yes. ठीक है?
So one question, sir.
Ah,
Sir, every asset in here it's motor and it has a lifespan. So where is that calculation that after a few years the motor needs to be repaired or changed? That cost factor has to be taken into account.
so that is the cost of preventive maintenance. बरोबर?
Sir, but the capital, the machinery, they will also be depreciating. So will that be taken into account as well?
Yes, yes, yes. That will be taken into account, depreciation cost. Okay. That is shown in this Excel sheet. Okay. Where I have taken depreciation expenses, COGS, SG&A, R&D expenses. I have not just, I will explain you what then the operating profit, EBIT, EBITDA, all those things I have done, then DCF and NPV. Yeah. Fine. So yeah, you can take, I have not taken this into this calculation. You can add it. Okay. The future maintenance cost. Okay.
Mhm.
Yeah.
Okay.
Preventive maintenance cost that will be incurred.
Okay.
Now appraise me what should be the RM cost for a millet. Give me a rough or to the best of your knowledge. I've taken as 50. What will be the RM cost? Total RM cost for a millet manufacturing. What is the cost of ragi you are getting in South, in
60
Karnataka?
rupees, I suppose.
Huh?
60 rupees per kg.
So I will take it as 60 instead of 50. Yeah. Now I go to processing cost. How this processing cost has come? I have added utility costing, which is what D40, and I8, the labor cost here. Okay. So it is giving me total processing cost. So then PM cost. What is the PM cost?
Packaging
10,
material.
which is 10 rupees for a 200 gram pouch. I have taken an very high level 3 ply PET MetPET poly, okay, pouch, okay, for our 200 gram millet, okay, a Ziploc pouch, and also there is an inner packing inside. So a Ziploc and inner packing, small poly pouch of 200 grams will go inside. That will help to increase the shelf life. So I've taken it as 10 rupees per 200 gram pouch, the costing. That means for 1 kg, it will be how much? 50 rupees. Barobar, 200 gram pouch, it is 10 rupees packaging cost. For 1 kg, it will be into 5. 10 into 5, 50 rupees. Okay. Is this clear?
Yes, sir.
Yes.
Then what will be the total per kg costing? RM cost, processing cost plus PM cost into 5, that is 50 rupees. That comes out to be 112.8 or 113 rupees per kg. That becomes my COGS. Somebody was asking yesterday, COGS. cost of goods sold.
Yes, sir. Yes, sir. Now it is clear.
This is your COGS.
Hmm.
Okay?
Yes, sir.
Now, WAC, I will take you a proper WAC calculation sheet. So first we will go to WAC. What is WAC here? See, forget about this. These are the cash flows. What is the depth? We have taken debt funding of 10 lakhs. We have taken equity funding of
10
10
lakhs.
lakhs. Beta we have taken as 1.2.
1.2.
Risk-free rate in India is 7. Corporate tax rate is 25. Business lending rate for MSME is 12. Market rate of return, which is your stock market rate of return, you are getting is 14. Okay. Now, so definitely 14 minus 7, we have seen the risk-free, the equity risk premium. Okay. Expected market rate of return minus risk-free rate is 7. Now, what we will do? We will first calculate the cost of equity. What is the cost of equity formula? Which explained risk-free rate in India plus beta into equity risk premium. That means what? Risk-free rate in India is how much? 7 plus beta is 1.2. 1.2 into how much? Equity risk premium is again 7.
7.
So it comes out to be 15.4.
4.
Now, what is the cost of debt? Cost of debt is what? Is nothing but the interest which you are paying on the 10 lakh rupees bank loan. Okay. That comes out to be, cost of debt comes out to be 9. What we do? We calculate the WAC weighted average. This is nothing but what we have done, weighted average. We have calculated the weighted average. So what is the weighted average? 15.4 into, what is the weighted average? 10 upon, weighted average for this is what? 10 divided by 10 of equity plus 10 of debt. So total funding is our 20, na?
Yeah.
So out of which
Yes.
percentage share of debt is 50% and percentage share of equity is 50%. Barabar?
Yes, sir.
So same thing. So that is nothing we have taken as weighted average. So what will come? 0.5 into 15.4. How much it will be? 15.4 divided by 2, 7.7. And 9 divided by 2, 4.5. I add both them up. What is the weighted average cost of capital? 12.2.
12.2.
Is it clear?
Yes, sir.
Everybody. It is a simple calculation.
Sir, can you explain one more time?
Yes. See, you got debt, 10 lakh rupees.
Okay.
Equity, 10 lakh rupees. What is your total investment? 20 lakhs.
Yep.
Yes.
What is the percentage share of debt in 20 lakhs? 50%.
Yep.
Equity is 50%.
Yes.
Barabar?
Yeah.
You have calculated cost of equity here using this formula,
Okay.
which is coming 15.4.
Yeah.
So equity is 50%. So 50% of 15.4, how much it will be?
1.7.
7.7. Similarly, share of debt is how much? 50%. So 50% of 9, how much will be? 4.5. So addition will go to 12.2.
Got it, sir. Thank you.
Now, what this 12.2 means? Your project should generate minimum 12.2 or above it to survive. So you got a benchmark here. Ki whichever product I sell, if I sell the millet snack, not whichever, I should generate a 12.2 or more than return in it. You are getting me? To make it viable.
Viable.
So it's 12.2%, right?
Yes, yes, it is percent. Thanks. Okay.
So, sir, this is basically like whatever my cost is, I should have 12.2% over and above the cost which I am having, and that should be the MRP for my product, something like that.
Yeah, MRP I will come to.
Okay.
Okay, we will go step by step. So 12.2 is something which you should generate above 12.2. That is when you will create value. That is when you will create profit.
So one question here.
Huh.
Once the product is created, it requires sales and marketing cost as well.
Yes,
So
we
that needs
have
to be figured
taken
out.
that into consideration. That's what I see. You have not gone to that stage. See, I have written here SG and administrative expenses plus advertising and promotional expenses. I have taken that consideration. Okay. Okay. So we'll go step by step. Huh? Okay. But by the way, it's a good point. So WAC. So our project should generate minimum 12.2. Okay. To make it viable. Otherwise, you will not create value. You will be on a losing side. Is it clear?
Yes.
Dr. Akshay, where if it is a white labeling outsourced production, then where do we bring that cost here?
No,
The
for white
prices?
labeling outsource production, you don't have any capex, na? What you are
Yeah,
doing?
capital is not
You are
there.
giving him the tolling charges. Barabar?
Okay.
That
Yeah.
means what? You are sending your packaging to him. Okay? Whoever the manufacturer is, he is doing the
Yes.
padarth, filling it up and selling it back to you. So what you
Yeah.
are selling, what you are paying him, the RM cost. He is also charging the processing cost in his bill to you. Barabar?
So RM processing, then comes packaging, then transportation,
Yeah. Okay?
warehousing.
Yeah. So in this case, cost of capital will not be there.
Okay.
Okay. Now, fine. Is this clear? WAC is clear. Weighted average cost of capital is clear to everyone. Huh? Is it clear? Please. This is a new
Yes,
concept.
this
New
is
concept,
this
not
is
new,
clear.
new for you.
This calculation is clear.
Calculation is clear. Barabar? Huh? Now things will get clear when we go. What? Sorry. Now
So
WAC is done.
once again, can you please just once again, can you elaborate what is cost of debt? How did we define it? Cost of debt.
It is the business lending rate. It is the interest which we are paying on the loan which we have taken from the bank.
So can I pitch in?
Okay, sir. Then what is the corporate tax rate?
Corporate tax rate we have taken as TC here.
25.
25.
No, sir. I just need the can you please define what is corporate tax rate? Matlab, what
That
is
is, I think, the tax which the government will be to from your income, no, which they will charge you from your business operations, I think, for the financial year.
This is what corporate tax rate at 25% on your taxable income.
Like a salaried class, you can't do this, no, like that for corporate. That is
This,
what.
if you look at this Excel
okay?
sheet,
Okay.
are you looking at this Excel sheet?
Yes, sir. Yes, sir.
This is profit before tax. How this profit before taxes come? I have subtracted interest from the EBIT. That gives me the taxable income on which I apply 25% of tax and then I deduct. Yeah?
So somewhat it is clear.
Yeah.
Can I explain?
Please.
So actually, sir, can you go to the previous sheet?
Okay, hold on.
Not this one.
Yeah.
Yeah. So the whole purpose of calculating this WACC is to check if our project is viable. Okay. In the initial stages, someone has asked whether why are we not thinking about the marketing and some costs here, because that will be reduced. That is a later part. Now we are just seeing if a project is generating more profits in terms of like from the manufacturing perspective. That's why we have not calculated that now, because in the initial stages we do not know about that, right? So the whole point is we are calculating the cost of capital here. What is the cost of capital? It's equity and debt, right? So The whole point is we should generate return which is more than the cost of our capital.
Yes.
Okay, that is the whole point of calculating this.
One question here. One question here. So this is the final 12.2 in this is the basic requirement of the product cost, right? That is only the manufacturing we're talking about. We're not talking about the other details. Is it right?
Yes.
Okay. Okay. So it means all the paraphernalias and all the return marketing and everything is separate. This is just the cost to manufacture.
Yes.
That is how MRP is different from cost of manufacturing.
MRP is different. This is your
MRP will have your marketing cost also added to it and your distribution charges.
Yeah.
What you give to your distributors.
Yeah.
In the initial stages, we are just evaluating if our project can generate returns more than 12.2%. That is the whole point. And we are taking the weighted average because, see, if our capital is 10 lakhs, we might have invested 7 lakhs as equity and debt as 3 lakhs. That's why we are giving the weighted average to this, not just an average. That's the concept. And someone has asked about the cost of debt. Why are we taking 1 minus T? See, for an equity, see, what is this? This is the cost, right? Cost means something that is going out of our pockets. Okay. So for equity, let's say 10,000 is our cost in this scenario. For a debt, it is another 10,000. This is something that we are paying for our capital. Okay. But the thing is, for the debt, 10,000 we are paying. But when you have done your business and you're paying the taxes, government is going to tax you only on your profits, right? That means what is profit? Your revenue minus expenses. In that expenses column, since you have taken the debt, you might have paid interest, right? So that interest will be reduced from your revenue as expenses, and you are going to pay your taxes only on your profits. Okay, so if you see it from a broader angle, your cost of debt is reduced by the amount of tax. That means on 10,000 we have gotten a discount of 25%.
Ma'am, 10,000 or 10 lakhs?
Just
It's just an example that I have taken.
Example.
Okay.
See, the cost of debt in our case is 10,000. That means interest is 10,000, but we are going to incur only 2,500 will be reduced since we are not paying corporate tax on interest, because this will be reduced from your revenue now.
Yeah.
That's why our cost is only 7,500 in this case, which is 10,000 minus 25%. Got it?
Okay, so what I got an idea like something I know something about this input tax credit. So it is something like that in the expense itself we have some part as interest. So that part is being reduced here. Is it?
Sorry, I didn't get you.
So it's what I can relate this to is something like input tax credit. In case if I'm buying some RM material, so I am already paying some taxes on that. And those
Input tax credit is very different because that is not considered when you're paying taxes. Now this in this concept you're getting a direct benefit, which is you're not going to pay tax on this interest part.
Yeah. So just mota moti, you will be taxed after interest is deducted from your total revenue. Okay.
Because interest is considered as an expense here.
Yes.
Expense.
Yes.
Yeah. Okay.
So here I have one, sorry, I may be jumping and going forward, but I just want to put everything in perspective for me to understand. So Dr. Akshay, what I was saying here is, supposing this comes to 12.2, whether it is going to be viable or not is one of the first step is this. Yeah. Later I add my other expenses and everything, and then when I work out the MRP, then I will arrive at an MRP which will tell me whether I can get returns or not, or whether I am viable in terms of the market or the competitors.
First
So
of
that
all,
is the final deciding factor,
yes,
right?
yes. So
After
first
this.
of all, MRP you decide basis your competitors' MRP.
Yeah, that's what I'm
first
saying.
Take into consideration. Okay?
Yes.
Yeah.
So
Now
in that MRP, this manufacturing cost is one of the element. Then comes administrative cost and other things.
See, I'm going slowly here. See, first of all, you got this. So what I've taken, this is cost of goods sold. I say WAC is 12.2%. So what I do, I take chalo 12.2 है, so I decide my profit margin as 12.2 to survive. I'm not thinking of
Okay.
any profit right now. Just let me complete.
Okay.
Yeah. Okay.
Okay.
Because 12.2 is required for what?
Just
Okay, to be viable.
Yeah.
Okay.
Yeah.
So
Yes.
I've taken minimum 12.2. So what happens with 12.2% profit margin? My price to distributor, PTD, X factory,
Yeah.
PTD is price to distributor, goes to 126.5
Per kg.
per kg. Huh?
Yeah.
I'm not
Okay.
talking of a SKU now. On that
Okay.
distributor, I've taken distributor might add 10, 5. I have taken 5% distributor margin, which I give currently into my business. It may vary from product to product, but I have taken 5%. Okay? 6 rupees added on it, it goes to
Okay.
PTR. That becomes price to retailer.
Okay.
Okay? Now
That is
132 comes out to be my, which is the distributor price. Don't worry, I'm going to share it. Don't worry. Yeah. So the PTR comes to 133. Now what will be the
Okay.
MRP in that case? I need to look at the MRP of.
My other expenses I have not added yet, no?
I am going to add. Don't worry. Don't worry.
Okay.
Just hold
Okay.
on.
Okay.
Just hold on.
Fine.
Hold on.
Fine.
Hold on. I'm arriving at a price here. Yeah. Don't worry. Okay. So MRP basically decided on competitors' MRP. Okay.
Yes.
Now what I come here. Now just this is you are clear till this part till PTR.
Yes.
Yes, sir.
Okay, fine.
This part is
Now, okay, fine. Now what I do, I go to my capex. I just want to give an how capex I have decided. I have taken a vibrosive. You can add. I've taken a tentative cost of 50,000, pulverizer 1 lakh, ribbon bender 2 lakhs, a FFS machine, auger filler, because I think for powders you require auger. A vibro might not work for fine powders, and an online inkjet printer with a sensor wala thing, iMark sensor to print on the
So
laminate.
this is ready to eat or ready to cook?
Ready to cook or ready to eat, whatever. See, it's
No, ready to eat will require more machinery. It has to be cooked, no? You'll need an extruder
okay,
and
fine.
all those things.
So what I will do, I will change it into ready to cook. Okay.
Yeah.
Now ready to cook millet snack. Okay. Now, what will happen? My total comes out to be 14.5 lakhs. I have taken what? 20. So out of which 5.5 I consider as my operating expense. Okay. Done.
Okay.
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 Packing capacity, I have taken 200 gram pouches, 25 units per minute. So that means how much? 5 kg per minute. That means 300 kg per hour. So in a day, I can pack 3.6 tons or 3600 kg. What is my making capacity? 3000 kg. Okay. So I have planned accordingly. I have got a excess packing capacity with respect to my making. Okay. So that I ensure that I utilize my capacity to the fullest. Okay.
So how did you arrive at 5.5 operating expense?
I will tell you that.
20 minus 14.5.
Yeah.
Okay, okay.
And that
Okay.
20 is like 10 debt and 10 equity, like that.
Yeah.
So can you take it from there so that once we go through the Excel, we'll see the formulas?
So one question here. This is an ideal condition. Ideal condition means that nothing is going wrong. So what are those unexpected conditions? Have we factored that in?
That we will see during this calculations.
Contingency, basically.
Yeah. Yeah. Or you can consider 5.5 lakh as a contingency fund.
Yeah.
Okay. Fine.
Sir, the
Now.
3,600 per day is like 12 hours of the things, right?
हाँ 12 hours.
Okay.
बराबर ना 12 hours है ना.
And sir, I think machine costings will also vary. I think this is
Yeah, it will vary ना. You can negotiate better. या फिर कोई any supplier might fool you also. So it depends. So these are tentative costing to understand the calculations. First of all, we should understand the significance of each term and how it is calculated. Now how much is the costing is you can try on your own. You can speak to suppliers, take alternative costings, feed it into this Excel. You will get different figures. Barabar?
No, why I wanted to ask you is because I have similar machines, but I think they cost little more. So I'm wondering, have I
Let
bought
it
more?
be. Let it
Okay.
be. I have taken tentative. That's why
Okay.
I have
Okay.
mentioned here tentative cost.
Okay.
Okay. You can put
Yeah.
your cost there. No issues.
Okay.
Okay. Now what I have taken, I'm doing an estimate for 5 years. Okay. Okay. Now all those ASM, SO, I have not planned that you can plan and accordingly B2B trade shows, salaries, travel budgets, A&P expenses and all. So basically I have not touched that part. Okay. That you can derive according to your planning. Now corporate tax rate is 25%, 15% is your depreciation, business loan rate is 12%, risk-free rate, again the same thing which I have discussed before. So what is the first thing? Sales revenue. So how much sales revenue I have generated for the first year? How I have got this figure? So basically, my total manufacturing capacity is 3 tons per day. Look at the formula here in the top bar. In the first year, I'm utilizing 20% of my capacity. I'm going step by step. 20% of 3 tons. Okay? I run it for 26 days and 12 months. Now we can add holidays that can go to 25. That also can happen. You can change on your basis. Okay? I have not considered the public holidays and all. I only considered the 4 Sundays. Okay? Now, so 26 into 12. That gives me what? First year production, metric ton per year.
Sir, I
Getting
have
me?
one question here.
Why?
Why 20% only?
Why?
20% only?
Why? See, it is a tentative calculation. If you are confident that you can manufacture 30% or 40% and sell that.
You have to sell it also.
If you are confident of selling, suppose out of 3 tons, you are manufacturing 1.5 ton per day. That means 45 tons per month. If you are confident of selling 45 tons per month, operate it at 50%. You are getting me what I'm saying? Why I have done it 20%? Because I am putting a 5 years estimate.
Okay.
See, if you want to sell 50%, 45 tons per month, you have to employ that much of sales force.
Okay.
You're
What is
getting
the
me what I'm saying?
20% on? I'm not completely, but like per day,
20% on total manufacturing capacity.
Okay.
My
So per
total
year.
manufacturing capacity is 3 tons per day.
Okay.
I am only utilizing 20% of it. That means 600 kg per day to start with. I am manufacturing.
Okay. Yeah.
You're getting this now?
Yeah, I got it.
Okay.
But depends upon the sale, right? So 20%.
That is your study, na? I am saying I am not confident of selling. मैं 600 किलो ही बेचूंगा दिन का. I am only confident of that. Okay. But if you are confident more, you can add more. You can make it 30. You can make it 40. Whatever. Yeah. So what is the sales revenue here? What I have done here, this D26 into 1000, which is 1 ton is 1000 kg, into I have taken the price to distributor because that is what which I will be earning from distributor. It gives me my sales revenue. Similarly, what will be my COGS? COGS will be this 1.12 in the total volume. Okay. So I have got COGS here and I have got sales revenue here. Is it clear?
Yes, sir. I have one more question. Sorry.
Yeah, please.
You said one statement, right? So if you reduce the quantity, like operating this thing per day, this thing. it will increase the cost, right? So
Hmm.
now we are, I mean, utilizing less actually, only 20%. So will
Hmm.
that not increase the cost of manufacturing?
See, in this case, what I have factored in, I will tell you.
Yeah.
I have factored per kg costing.
Okay.
Okay. That per kg costing, irrespective of your capacity, is going to remain same.
Okay. Okay.
And this will reduce year on year. So as I go to second year, the processing cost will reduce. Third year, it will reduce more. Fourth year, it will reduce further. You are getting me what I'm saying? In the first year, it is the highest processing cost. But with that highest processing cost, I am getting this much PTD. You are getting me what I'm saying?
Mm-hmm.
That is, first of all, is this clear to everyone?
So you've
Yeah,
taken the
this
sales
is
revenue as the margin of the, because MRP is not given there, no?
So
No,
why would
nobody
it
sells on
reduce?
MRP. Why you are considered about MRP? You are selling it to distributor.
Okay, I'm selling.
Your
But we
margin
can,
is what distributor gives you.
no, but with online sales and all.
That I have not taken into consideration. I have taken only distributor chain.
Okay.
Okay.
Fine.
Even
Okay.
that is more expensive online.
That is also expensive. Okay. Yeah, it is.
Okay. Okay,
so
fine.
where is our margins? Basically.
Our margin is here, na. This 12.2% is our margin. I will put
Oh,
here.
that is very
Our margin. Yeah. Is it clear?
okay.
So one question, why we are taking as that our production will reduce, it should increase after every year.
So wheat is increasing now. First year is 187, second year is 374.
Okay.
This is production.
Okay, this is production.
It is not decreasing, it is increasing.
Okay.
Because we are increasing our capacity utilization. Now, see, first year it is 20%.
Yeah.
Second year it is 40%. Okay. You're getting me?
Yeah.
Third
So
year
one
it is.
question, and again one question. So if we are saying that we are just having 20% production in the first year, it means the first year we are having 80% loss.
No, it's not
80% loss नहीं है सर, 80% अंडर यूटिलाइजेशन ऑफ कैपेसिटी है.
सर है तो वो लॉस ही ना.
No. I think 20% is what safely you can produce and sell, no?
You don't spend on the raw material also, no? You don't procure so much of raw material. So you also save.
Even the resources also.
Yeah, you save the resources, manpower, electricity.
No. Manpower cannot be
But
reduced because
manpower
it's
will
the
remain
same.
We need to
same.
have,
What will the manpower cost will remain same? The utilities cost will go down. Okay, in that case, your RM cost, PM cost will go down in a sense that you have to invest lesser to start with. The only idea of taking 20%, since to start a business, I'm low on my funding. If you're high on your funding, go, and you are confident of selling that much amount, then that is okay. See, what happens, problem is when you manufacture a food product, your expiry date starts.
Yes.
So it doesn't make any sense to overproduce when you are not capable of selling it.
Yes.
Then it leads to more loss.
Sir, but the capability will only get decided once we understand the marketing and the sales distribution as well.
Yes.
So, if let's say that today, the cost is 12.2, then we have to be very aggressive in marketing. So we have to spend a lot of effort and money for the marketing as well, right?
So accordingly, you increase your selling and administrative expenses, and accordingly, you increase your production also.
Okay.
So it will depends on what strategy you are taking, isn't it? I have taken this strategy. Simple. Okay.
Sir, if in case the capex is less, so that the break even will be very faster or what?
See, no, ऐसा नहीं. If capex is less, your manufacturing capacity will be less. So you will recover more time to generate the same sales revenue. You're getting me what I'm saying?
Okay, I have to increase the sales part then.
The break even will become early if your profit margins are more. Okay, fine.
Okay.
Okay, so what I have done here, so I have taken those values of sales revenues for 5 years, similarly COGS here, and I have taken depreciation here. Okay, now this is the depreciation schedule which I got ready-made from net for a opening written down value of 15 lakhs, depreciation of 15% and closing WD. Okay, similarly for a 10 lakh loan, I have taken this amortization schedule with a EMI, monthly EMI of 2 lakh 77. Okay, in this. One thing which you need to add, and another assumption which I am doing, that you have your own manufacturing space. You own that. If not, then you have to add the rent.
Yes, sir. Yes. Rent.
Reduce the rent from it.
Hmm.
Okay. Now what I do, this is in bracket because this is negative. COGS, SG&A is negative. It's just selling. And now how I have considered selling and administrative and A&P expenses for first year, I have taken 10% of the sales revenue straight away. You can do your planning. I may employ 4 salespeople, 2 ASM, 3, whatever team, whichever territory you decide, basis on your strategy, how aggressively you want to approach the market. Simple. That is your strategy. Simple. Okay? Now, SGA and expense for the first year, I have taken as 10% of the sales revenue. Okay, this is R&D. Forget about whatever R&D expenses you want to incur. You put it here. Okay, I have taken the, from DST, I have taken the rebate. I have got my lab approved for DST. So that's why I put in that thing from Delhi. So forget about this thing. We come to operating profit, EBIT. And what is EBIT here? C14. C14 is what? Your sales revenue. Plus C16 is your COGS, which that means it will get subtracted actually because it is in bracket. It's a negative sign. C17 will get subtracted. And then C15, which is the depreciation, I am subtracting to calculate my EBIT. What is EBIT? Earning before interest and tax. So from the sales revenue, I have subtracted the depreciation, I have subtracted the COGS, and I have subtracted the selling and administrative expenses. So for the first year, I am not making any profit. I am at a loss. Is this clear?
Because you have not touched the break even. That is what.
No. Because I'm going step by step. I'm going slow.
Mhm.
Okay. I don't want to overproduce or something which I cannot sell. I have a limited sales team. Okay. And my product is new. So I might not capture the market so early. It will take time. Barabar? Simple. What I do with this, then I calculate EBITDA. What is EBITDA? Earning before interest, tax, depreciation, and amortization. So for that, what I do, I add back to this. Now this actually is to some extent now not relevant. We will see the relevance of this, but in calculation, we are not going to use this. We are going to use EBIT in calculation. So this is, I add back the depreciation to this amount. Minus 18,000 plus 2 lakh 25 will give me something these values. Okay. Now what I do from the EBIT, which is my operating profit, as Neha said, you will be deducing the interest, which I have taken as 12%. Okay. Now, basis this amortization schedule for a 10 lakh debt loan, my EMI, monthly EMI comes out to be 2,77,500. So what I do, I will reduce this. So what will be this now? Minus 2,95,000. Since I have not made any profit, please Neha, correct me if I'm wrong. Am I eligible for taxation?
No.
Is she there? Hello? Is she there? Okay, fine.
No.
Okay, fine. So that's why I have not taken the tax calculation here.
Sir, one question. Like the corporate tax is applicable for all MSME products?
No, that you need to check now. I don't know about it. It might differ also. Yeah.
Okay.
Okay. Okay. So this is clear. First year calculation.
Yeah. So one point I want to add for the corporate tax rates. I think government has a new rule, like whichever the company starts after October 1st, 2019. So it will be very low rate or nil. We can
See,
get a
you
return from.
use whatever rate is given by the government for your product per se. Okay.
Yeah, right.
Simple. Yeah. So first year I'm not making any profit. Okay. Now what I do? I go to second year. So similarly, in the second year, what has happened? I have started making profit. Because why? My sales revenue has increased. Okay. Accordingly, I have increased my SGA expenses also. So instead of 10%, I have gone down to 6%. Now there is COGS is increased. Okay. So EBIT has also increased. Earning before interest and tax. So just to make you clear, what is EBIT? So EBIT is the company's income before income tax expenses and interest expenses are deducted. So the formula for EBIT is sales revenue minus cost of goods sold minus operating expense. Okay? So this is the formula. Okay? So that's how we have calculated it. Then we add back depreciation, we get EBITDA. Similarly, we deduce the interest, the EMI, which we are paying, which is another outgo. And profit before tax comes out to be this much. Now on that, I levy 25% of the tax. And this is 13,80,000 is my profit after tax per year. Is this clear?
Yes, sir.
Yes, sir.
So what we are doing now? So we are similarly for third year, for fourth year, we have taken the figure from this sheet, these wala figures. Okay.
So what is
And
for the second and third year? How much percentage we are increasing?
What?
That capacity production.
It is 20 for first year.
Okay. For second.
Then by 20%. 40
Okay.
for second year, 60 for second year, 80 and 100. So for 5 years I have done it. Okay.
Okay.
Mota moti.
Sir, one question, sir.
Hmm.
So normally, let's say we have a production unit and we have a marketing thing. So what is the share of marketing cost on a average basis? Once we are dealing with the products. So how much should we keep?
I have
save
taken
for
it as
marketing?
10% of the
Sorry?
sales revenue. 10% of the sales revenue.
10% of the sales
So it
revenue.
will vary from 6 to 10%. To start with, I have taken on the higher side.
Okay.
So this much budget. So that means to start with, so salaries and all and other expenditures should be 23 lakhs. So it's 2 crores 36 lakhs 92,000 is my say revenue. Then 10% of it comes out to be this much. So this is what the budget ideally I should take so that I can incorporate. I should incorporate those many salespeople as per this 23 lakhs of budget.
So it means you're talking about 6 to 8%, 6 to 10% per annum, right?
Yeah.
Okay.
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 So now what I have done? Okay. So now accordingly, so and so forth, I have added. Okay, taken the values, and then on it, I have accordingly reduced my selling and administrative expenses. The reason why I tell you the logic for second year I've taken as 6, then as 4, then as 3, and then as 3 again. Because if you go on adding 10%, then it doesn't become viable. The model is not viable. Because if you look by the fifth year and you add all these 5 years of your SG&A expense, so in the fifth year, so ideally you will be somewhere, here you will be doing somewhat 35 lakhs 53,000 will be your SGA. You're getting me what I'm saying?
I guess.
Okay. So you have to take care of that. Okay. Now, operating EBIT has increased accordingly year on year, so as the profit after tax. Now, what I do? I calculate the operating cash flow. How I calculate the operating cash flow? To the profit after tax amount, I add back the depreciation, which I have earlier subtracted. Why I add back to the depreciation? To calculate the operating cash flow. What is the reason? Why the depreciation should be added back to the PAT?
That's
Because
the fund still available with us, no?
because depreciation is a book value. It is not which is going out. Wherever it is not the cash you are paying someone. Okay, it is just a book value. So we add that back. Now, what we do is we calculate our discounted present value of future cash flows. And in that, we calculate what we take WACC as our discount rate. WACC is 12.2%, which we have taken as discount rate. Now let's see what is DCF. Is Neha there? Okay, she's not there. Fine. So I would have asked her to explain again. Okay, fine. So in EPTA, we have added depreciation back, amortization back. Okay, we are talking of DCF. Now, what is DCF? Discounted cash flow analysis attempts to determine the value of investment today based on projection of how much money that investment will generate in the future. So the present value of expected future cash flows is arrived by using a projected discount rate. What is that? WACC. If DCF is higher than the current cost of investment, the opportunity could result in positive result and may be worthwhile for investment. So what is the thumb rule? DCF should be higher than the current cost of investment. Okay? Companies typically use weighted average cost of capital for the discount rate because it accounts for the rate of return expected by the shareholder. Okay. Now what we have done, this is the formula basically. Here is the formula. I have written the formula in this sheet. No. So the formula is written in the Excel here. Okay. So what is the formula here? So C27 is your operating cash flow divided by your WACC, which is 12.2%, raised to that year. N. N is what? Your 1, first year. If you go to 2, here C13, it will be D30. So it will become 2 raised to N. That is the formula for the present value of future cash flows. So how much we are getting? So 54 is the operating cash flow, but since the value will be less in the future, the reduction you will see here. So 15 has come down to 12, 34 has come down to 24, 54 to 34, because we have discounted it. We have discounted that value because the one thing which we discussed in the lecture, that 10 rupee today might not be the 10 rupee 1 year after. It might be 9 rupees. So that's why the value has gone down. We have discounted it using WACC as the discount rate. The WACC which we calculated, 12.2. Okay? Is this clear? Formula part you can see that's not an issue. Formula I have already built into the Excel. Okay? Bolo. So what I have done here, I have added all the 5 years of a discounted cash flow. And I am getting somewhere 1 crore 9 lakh 16,415. Total value, summation of all the 5 years of discounted cash flows. I have not taken the operating cash flows into account. Why? Because they are not discounted. I want realistic, much more realistic values. That's why I have taken these values. It comes to be summation of all these. It comes out to be 1 crore 9 lakh 16,000. From that, what I have done, I have subtracted my initial investment. What was my initial investment? Initial capital was how much?
20 lakhs.
20
20
lakhs.
lakhs. Then that becomes net present value. Barobar? After deduction of my initial investment from the DCF.
But this is for 5 years, right, sir?
See, it will change from scenario to scenario. Some might find a break-even point early. Some might find later.
So from where we'll get that sales expense ratio? Like how we can calculate from
SGN, I will come to that.
Okay.
Yeah, we will discuss that. Let's complete this Excel sheet. Is this clear to everyone till now?
Yes, sir.
Yes, sir. Yeah.
Yeah. Yes.
So now what's happening? So NPV you got. Now
Sir,
what?
one question. Hello.
Uh-huh.
Yes, sir. One question. This all Excel sheet is related with my own manufacturing plant. But
Yes.
currently, I am not establishing my own manufacturing plant, and I want to do the outsourcing. That time, how to go for this WAC or everything?
No, your capex will not come into picture now in that case. See, you don't have any depreciation, you don't have any capital expenditure. What you have is this COGS. In that, what you are paying him, you're getting. So this will go out, depreciation will go out, COGS will remain, SG&A will remain. Depreciation will not be taken into accounting. Correct me if I'm wrong. Neha, are you there? Is she there? Fine. So depreciation will
Sir, I
not
am
be.
here.
So correct me if I'm wrong. See what she's asking for a toll manufacturing. How she will use this sheet. So
For
what?
a
Hello.
sorry, for a
Toll
Contract
manufacturing means
scheme
third
of
party
outsourcing.
manufacturing. She is not investing in her own plant. She is not doing any capital expenditure. There is no capex of 20 lakhs. Barabar? What she will require maybe an operating expense because she will be paying the COGS, na?
In that case, we can actually, I think, I'm not sure, but in that case, we do not have to calculate all this processing cost. That is actually in this case, sir explained when we are setting up the manufacturing unit. In your case,
No, no,
I think we can
just
go by
the
this.
processing cost she has to calculate because she has to negotiate with the third party vendor
That will be
regarding
the
the
project
pricing.
cost, right, sir?
Yes, definitely. I need to take that traded purchase rate for my material,
So
including the packaging and finished
so
good.
what will happen? This depreciation expense row will go out. You have
Since
your
we will
own.
not have any machinery and everything.
Yes. She's not having any machinery. She is operating from her head office and a warehouse where she is taking the material from a third party, packed in her own packaging material, and then distributing it and selling it. So what she will have, she will bear the cost of RM, PM, utility that will be charged to her. PM the cost she is already bearing. RM, utility and labor will be charged to her by the third party vendor. Barobar. Barobar na?
Yes, sir.
Then you got selling and administrative expenses. You have to consider this. Then remaining will remain the same, rest of it. Depreciation row will go away because you don't have any capex. What capex you
Sir.
have is just
Sir,
operating
one question
expense.
here. In the third party, the marketing and the sales will be our own headache, right?
So we have considering it now.
Okay.
After COGS, we are considering. We are just not considering the depreciation part of it.
So, but sir, let's say that we received the one particular product at the rate of 10 rupees per piece. Let's assume that. Now, market, we have already surveyed the market that we can't go beyond 12. Let's assume that also, right? Because 12 rupees is the costing of the product by another, with another manufacturer. So it means we have just 2 rupees to play up for the marketing and sales. So how
बरोबर.
do we, in that case, how do we make sure that, we'll be winning in the market?
So in that case, what is the best thing to ensure that your RM cost is minimum? How you will take down your RM cost? By purchasing it in bulk. But in food industry, that is also not possible because food is a perishable item.
Absolutely.
Yeah. So
Yeah.
even that is not possible. So that's why toll manufacturing is not at all cost effective.
So I have a question. For our industry, all the raw materials, most of the raw materials are daily market, like sugar, egg, oil. So how we will calculate for that second year, third year, approximately, or what is the ratio of the calculation for
See,
the future?
that is why we have calculated the discounted cash flow of future.
Okay.
Taking into that's why the values have increased. It's
Okay.
not that sugar price might increase, going on increasing further. It might decrease also. Now, at the end of the day, these are assumptions. You're getting me what I'm saying?
Okay,
But
sir.
they are trying to factor in and making it more realistic as possible.
Okay. Understood.
Yeah. So now what has happened? So what I calculate here is IRR. What is internal rate of return? That means the return which you are getting by doing your business. Simple. Whatever work you are doing, which is basis these present values. That internal rate of return, you got a formula there. Okay, in Excel, it will straight away give you IRR, percentage IRR, which is 20.78%, and your WACC is 12%, 12.2. So what was our initial discussion? We should generate more revenue or than WACC. So if your project generates more revenue than WACC, which is in this case, it's happening, then your project should go ahead. So there is a green signal. IRR greater than WACC, accept. So the investor will say, yes, I will invest in your project. NPV is positive. Yes, it is positive. He will accept. If NPV is negative, he will reject. IRR less than WACC, he will reject. Simple. That is a simple metric. See, I teach people how to pitch also, to be very honest. But thing is that this Excel sheet comes in handy when you speak to your investors. Because he is interested in money, how much he will be gaining out of this. And that is the reason why in third party manufacturing, you don't have that much of options to play. And you know what happens then? Then you are limited with your profit margins.
So NPV should be higher than?
NPV should be positive. Net present value should be positive. Net present value of future cash flows. And IRR should be greater than WACC for the project to go ahead.
Sir, sorry, can you briefly explain IRR again? How to come about it?
So internal rate of return is nothing what? It is what? It is the percentage profit you have made year on year, a cumulative. See, all these 5 years, first year you have made a loss. Whatever. Second year you have made a profit. Third year you have made a profit. But at what percentage? What is the cumulative percentage of this profit you have made? You're getting me what I'm saying? That
Okay,
cumulative
sir.
percentage is this. So basically IRR is nothing. You just type your values here. You can go and search for formulas. I select this row. Now in the equation, you can write a guess. So there is no need for writing guess. It calculates at considering it as 10% and it gives you the value that how much percentage profit actually you have made, which is 20.78.
Okay, sure.
Okay.
Okay,
Now,
so that's the average of all the 5 years.
Yeah. Now what happens is why this is important, why this matrix is important. Now this gives you a limit on how much expenses you should do. For example, I think there was one suggestion that I will go aggressive and I will put more people in marketing. Then year on year, if I employ instead of 6%, if I go on employing 10%, investing 10%, increasing my sales force, okay, what will happen? My margins will go down. Barabar, I am increasing my expenses. So for the second year, instead of 6%, I have taken as 10% of sales revenue. See, where the IRR has come down.
Almost 14%.
6.89. It is lesser than your WACC.
The project is rejected.
Yes.
Sir, is there any benchmarking for the IIR for sector wise like FMCGs? मैं कितना होना
That
चाहिए?
see नहीं ऐसा नहीं है that you have to that is see there are not many factors. IRR is just not related to a sector. It is also related your how much manufacturing capacity, how much is your capex, how
It's
much is your
individual
sales
business process
force.
also.
Yeah, this gives you a directional thing that whether I should go ahead with this project or not. And if I want to go ahead with this project, then I have to keep down my selling and administrative expenses to this to 6% of total revenue. That is when I will survive. Otherwise, I will not survive. अभी इसका 20 lakhs का investment is coming somewhere in the between second and third year. He is break even. Okay, so his 12 lakhs is the profit and then 24 lakhs. So 2.5 साल within 2.5 years he is getting his return on investment, the break even. In some cases you might, if your profit margins are high, if your PAT is high, then your break even will be higher. Okay, you are getting me what I'm saying? This
Yes,
is
sir.
Yes.
Okay, so basically if you want to pitch it somewhere, you have to optimize this sheet to the best of your knowledge with respect to your product. You're saying me, I'm taking a in general approach.
Sir,
Okay.
one more question. This transportation and the warehouse, in case if we add warehouse expenses, all this comes under administrative expenses, right?
See, selling and administrative expenses are different as I have given here PTDX factory. When I say PTDX factory, the logistic is borne by the distributor.
Sir,
okay, you can give an FOR price, depends on you, and accordingly make changes. Yeah.
Sir, I have one more doubt. If some products are seasonal products, like for example, I am planning for that plum cake premix. So it is only seasonal business for Christmas and for the Easter time, and sometimes in May wedding season for the Christian people. So how I can calculate and get that to make it positively to achieve the yearly revenue?
So, but for what rest of the year do you manufacture, or do you only operate during Christmas?
No,
There are
I'm
other products now also.
for to do the new product development on this.
Okay. So what I'm saying, you will be having the data for last 3 to 4 years. How much you have sold.
Yes.
So seasonal sales data is there.
Okay.
So you have to average it out, because here we are calculating for the whole year. So for you, the average will be different.
Okay.
Yeah, because this is the average data we have taken. Because at the end of the day, you are taking the annual sales, na? So the annual sale includes your seasonal sales also.
Yes,
Now,
sir.
it might vary from year to year. This Christmas the sale was less. Next Christmas the sale might be more. I don't know. Okay.
Okay.
So anyway, you are taking the annual data, annual sales data. You are not calculating this sheet on quarterly basis.
Okay.
This is annual data. So accordingly, that factor which you are saying, the seasonality, the changes in the seasonality is factored in already.
Okay. Considered. Okay.
Yeah.
So I have one question here. Is the logistic cost borne by the distributor? Is it a norm in the industry?
No, it depends on you what you got to offer. Distributor is also happy to pay. If you
Because
want to
you have
take that,
taken it that
see,
way,
if
right?
you want to give him FOR, give him FOR, na? If distributor is not
What is
ready, you give him FOR,
what is
free on
FOS?
road.
Okay.
So what is
So what
FOR?
is the norm? I don't know. I'm not sure about it.
No, it
See,
depends
What
upon
is
the like how
FOR?
do you
see, it is between your negotiation between you and distributor. Simple. There is no such
correct.
standard norm. I give X factory.
Okay.
You negotiate with the margin, like 6%
Ah,
margin,
ah.
include that
Okay.
margin
X factory. Okay.
Hmm.
7% something like
It is total matter between you and the distributor. How you are negotiating with him. Simple.
Sir,
Okay.
based on this, right, sir, based on
Hmm.
this,
Hmm.
we have this profits arrived, right? Let's say, for example, if I want to assign a target to a salesperson, like this
Hmm.
much I am manufacturing, so how much I may increase the production with respect to the salespersons or sales team size, right? So how do we arise that target to a particular salesperson? Like this much target has to be achieved for this month or something like that. Because I know production.
Here the calculation is simple. You
Okay.
take the industry norms. What is the salesperson's or sales executive salary? 25,000.
Yeah.
At least uh, he should earn 25,000 for the company through his sales. That much sales he has to do, and plus your profit. That is the target. And it is distributed. Suppose you are manufactured 1.5 ton or whatever, how much we manufactured, 187 metric ton per year. Okay, so that goes to somewhere 1 month. Metric ton per month. Sorry. So now yesterday I think we discussed, in your area, retail outlets. Kitne hai? How many are there retail outlets? 2000, I'll say. What are the daily beat calls? Beat is just not an acronym. It is a daily uh, shortest route, I will say. Shortest route. You have to do daily routing of the sales guys. So he has to do 40 calls in a day. You're getting what I'm saying?
Yeah.
So if you want to cover
2000 retail
2000,
outlet.
so accordingly,
So
you
now,
have to take number of 2000 retail
employee.
outlets are there. So one salesperson will do 40 calls in a day. You are not going to cover 2000 in a day. Maybe you will be covering, you have decided I will cover 2000 in a week. So that means 285 per day. So number of salespersons, this also depends on, because if you employ more salespeople, your operating cost will go up.
Correct. That's what just
7 salespeople.
okay.
And each salesperson should sell 2 metric tons.
2 metric ton per day.
Month. You are manufacturing 15 metric ton per month. I'm just putting it down here. Now somebody say 25 or whatever it is. Now in that you have effective calls. Effective calls are something who have given you the purchase order. So accordingly, total calls, effective calls, you derive the percentage. Then you take the salesperson and why your percentage is down. This is how you follow up with the sales team.
Okay. This is
With a
what I
stick.
wanted. Yeah.
You get a stick
Yeah.
yard. Okay?
Yeah. Okay. Got it.
Sir,
Ah.
sir, have you considered any other contingencies like lockdown, calamities, fire at the premises?
No. You can add it into this capex and all. Yeah.
That is all comes under when in case of any occurrence happened, right? So that time
Yeah.
you just have to have additional
Yeah. You
because
can
that won't.
plan it before. No issues. Instead of 20, go for 25. 5 lakhs in contingency. Yeah.
Where is contingency?
Okay.
Where is the contingency cost added, sir?
No, I have not added in this Excel sheet. You can add
You
in the
can add.
funding.
Okay.
You can
Okay.
add.
That can be added to the final cost.
Okay.
Okay.
Anything else? Any doubts in this? I think it was pretty much clear to you people.
Yes, sir.
Yeah, sir.
Yes, sir.
This is very
Yes.
informative.
Okay, great. Chalo. So anyway, you can use these formulas here or whatever for your sales team and planning and all. Yeah.
Yeah.
So done. Okay. Now we will quickly go. There was a question for. We'll quickly go to the days outstanding of Jando. Go over. So basically, so this commercial feasibility is over. You come lab scale study, prototypes are developed, 3 months stability study at 25, 60, 40, 75. Pilot scale study, you got 100, 200 kg, again a 3 month stability, then do product testing, main plant trial and 3 month stability. This is what the standard procedure is. Product testing, as I said, is a blind product test. Blind product test means what? Assessment of a product in its own intrinsic methods. So there is no branding on the package. It is a blank white pack in which you place it. So blind product test can be, as I said, a CPT, 200 consumers, one sample size, 4 metro cities, 800 consumers, and accordingly you do your testing along with the agency on the protocol pre-decided and the results. And basis that results, whichever option wins, you take ahead that. So branded product testing is done. Basically, that is also done. So you either do blind, you do branded. Most often it is done branded. Then home use test. So there are differences in this. So testing takes place at the participant home. So basically, when we place toothpaste, so what we do in sequential monadic, I tell him I have 3 options. So first option, he is regularly using his toothpaste Pepsodent. So I give my Colgate Active Salt 3 options. So first week he uses his regular Colgate Pepsodent. Second week he uses option 1 of Colgate Active Salt. Third week he uses second option of Colgate Active Salt. Fourth week he uses third option of Colgate Active Salt. And in the 5th week I go to him and I ask him for the differences. That is sequential monadic. Okay, that's what I do. Then central location test is what? This is about in home use test. Central location test testing takes place in a control environment in a full booked hall. Simple. So you call people there and do the testing. Fine. Now, pilot scale up and MPT. MPT is main plant trial. So this is some of the pilot scale up parameters. Okay. Now these are universal scale up rules. Now listen to me carefully. Here. When I say fill level, 60 to 70% of working volume, that means what?
60-70% of the total production capacity.
Yes. So if my capacity is 200, 20% you discount, 80% is my working volume. So 200 ka 80% is 160 and 160 ka 70% will be your fill level. You are getting me? Okay. This is for powders especially. Powders, the fill level is lesser. Okay. In liquids, it can be more. Now, blend uniformity is something but the particle size distribution. For powders, I'm again saying this is for powders because we are discussing for millet. Okay. Energy
Sorry.
per kg.
Sir, sorry. So can you explain what is field level? Why we need to have this percentage working volume?
Because suppose if you are using a plowshare mixer.
Okay.
Plowshare mixer में क्या होता है? What is there in plowshare mixer? You got plows. They rotate in opposite direction to each other inside a cylinder. So when they rotate at a particular RPM, they throw the powder up.
Okay.
Okay, if you fill it to the working volume, then the powder might come out or stick to the lid of the reactor. You're getting me what I'm saying? Mixing will not be proper.
Okay.
Now, energy per kg. What is energy per kg? Power by mass ratio. How much mass you have taken inside and how much power the rotations or the RPM you have given. That has to be kept constant right from the lab to the pilot plant to the main plant. If power by mass ratio is 1.5, you have to keep 1.5. Power is what? The energy supplied for mixing by your motor to the kg mass inside the reactor. Okay? If I'm so same shear and flow pattern mixing, if I'm using a plowshare mixer or a ribbon blender at a pilot plant level, the same should be utilized at the main plant level. So that gives me same shear and flow pattern. Ingredient addition sequence must be identical. Okay. As far as
Sorry,
powder properties are concerned, you should, yes.
Sorry, these cost or energy consumption details will machinery will give, or we need to monitor that?
Means I have not understood.
No, if I'm having a machinery, right? So how much power it is used, then
So I
like
shown
how
you
we
the
can.
calculation. Na? In the Excel sheet, the calculation is given from the HP of the motor. From the HP, you convert it into kilowatt hour.
Okay.
Ah,
Okay, got it.
okay. So powder properties, you got same particle size distribution, moisture and density should be kept same. Simple. So these are universal scale-up rule. Now I come to a millet manufacturing, which is specific for a ribbon blender. Now, if you see the pilot batch size is mota moti 10 to 20% of your commercial batch size. If your commercial batch size is 500 kg or 1 ton, your pilot batch size should be 10 kg. Wherever 5 kg to 10 kg. If your commercial batch size is 500 to 1000 kg. Okay. Fill level 65%. Now tip speed is many of the people, if some chemical engineers might be knowing this. Tip speed is nothing but when you have a mixing mechanism inside. So this is the stirrer inside a reactor. Okay, this is mixing the material inside. So the speed which is at this tip can be calculated. Okay, this decides the flow inside the reactor or the mixing. Either it is in turbulent region or laminar region. So basically it should be in turbulent region. So accordingly you arrange the tip size or tip speed, sorry, not tip size. So this has to be kept constant for main plant. RPM higher, but when you go to commercial, higher size, the RPM is lower. Mixing time goes higher. Okay. So target is same, CV target, which is blend uniformity, should be same. Okay. Done. So I have covered the scale-up parameters in short because it requires a deep technical understanding of the reactor diagrams and some chemical engineering terminology such as Reynolds number, turbulent flow region, lamellar flow region. Okay, that involves calculation. So that is not a part of this. You can source this out to the manufacturer of your equipment. He will guide you that how much tip speed I should keep, how much should be the fill volume to have optimum mixing. He will guide you because this equipment manufacturers have chemical engineers deputed who do all the CAD design and everything, all the values. Accordingly, they design the vessel, L by D ratio, all those things they will decide. L by D ratio is length to diameter ratio. Okay.
Sir, can
Okay,
you go to the previous slide?
This?
Yes. So I just want to ask you the parameters and universal scale-up rule. These parameters may vary product to product. Or it
Yes,
will be constant?
yes. If it is a powder product, it will remain same. If it is a liquid product, the properties will vary, na? The parameters will vary. This is universal for powders, I'm saying. For powder blending.
Sir, how about cake and food? I mean, cake
Cake
or
is powder
banana or
blending, na?
whatever.
You prepare a cake premix, na?
No, sir.
Correct.
Actually, for Gulkan premixes, or it is readily available in the market. If we are going light kind of product, what will be the ratio? There is a powder things is not usable, and also for the fluid liquids. So how we will calculate for that one?
No, no, means what you're trying to say, you are taking the cake premix. That means you have a bakery.
Yes, I have a bakery.
So in the bakery, you got a planetary mixer. Na? In that, these calculations are not there. Those that is for dough mixing.
No, I'm not asking for the premix part. It is if plan to make a Gulkan mix premix. So
Gulkan
it.
mix is a thick liquid, na? It's a pasty thing, na?
Yes, sir. How we will calculate for that one? It is not comes in a liquid form or in a powder form. So it is a mid.
So for that, you got shear mixer. You got shear mixers and other plowshare mixers are also there.
Okay.
Okay. So for paste, there is a different thing. I think the manufacturer is the one who will guide you on this. Only thing is why I can cover those things in detail, the scale up values and all. But that will involve a lot of chemical engineering understanding. So that
Okay.
doesn't make any sense. Okay. So
Okay.
all the population here will not understand anything of it. That's why I'm saying.
Okay. Okay, sir.
Yeah. So that is the thing. So now, yeah, this is one. Hold on, hold on. These are some stages which I have added for TRL. TRL is technology readiness level. So basically, these are the key milestones which you should achieve if you have to have a funding. So basic principle observed is that TRL1, you get a government grant or university technology concept formulated. If the key milestone is a patent application or experimental proof of concept, so you also get a grant for that. You should have lab. So key milestone is lab data validation. Then at each TRL level, so basis your TRL level, you get the funding from the incubation. Yeah. So this is just for your reference. Okay. Because technology readiness level also has its own different documentation and all. So that is not a part of this course. I'm not going to touch that. This is just for your reference. Okay. Technology readiness level has its own document set, which you need to produce and submit to the incubation center to get that particular grant. Okay. So I'm not touching on those things right now because there's a that is another, what I can say, 15-20 hours course. Because in fact, when I teach NPD to my students, PhD guys in ICT, it's a 45 hours course. You're getting me what I'm saying? It is a 45-hour course. So we go to much detailing. Okay. So anyway, we have a whatever 12.5 hours course. So we did our best, whatever I did my best, whatever I can cover in this. Now, one thing which is remaining is your
Sir, did you mean that TRL level to get the funding for setting up an incubation center or testing the product
you
in
need to, why you are setting up an incubation center? You have to work in an incubation center.
Okay, so for
The
that matter will
incubation
also
center will manage to give you the funding basis your TRL level.
Okay, okay.
हाँ, आपको थोड़ी incubation करना है, तो वो क्या करेंगे फिर?
No, I just wanted to clear it, sir.
Yeah. Okay, so now we will just design it for, sorry, this calculation छोड़ो इसको. We will just immediately design it for MSME. Okay.
Sir, if you need a fund, then only we approach incubation center. Otherwise,
Yes. Okay. And if you guys require any guidance, I have one of my colleagues. She was my student, PhD. Shweta Walekar. She is associated with Aishat. She can also help. So she does all the consultancy for and guides this new budding entrepreneurs. Okay. So for MSME, let's see what are the steps required. We will just green that. Business case kickoff meeting is not a part of MSME. Ideation, yes, might be. Idea screening, concept designing. So we can also take out concept designing. So if I take a time for MSME for concept designing, so I will just highlight this green, which are required for an MSME. Okay, whatever you think is required for you, you can. I'm taking out concept designing. So instead of concept designing, what we will have? Instead of concept designing, what we will have?
Product design.
Idea screening. Okay, sorry, ideation. Idea screening. Okay. Product design means you will develop prototypes and do a sensory panel. Simple. Okay. For MSME. You will not go to for concept and something because that will be time consuming. Okay. So sensory, so ideation and this, that might take 1 week. I'm just putting it on a week basis. So that helps. Idea screening again 1 week. Prototype 2 weeks. I will take mota moti. This will differ from person to person. Sensory panel 2 weeks again. Okay. I will do it as 3 weeks. Chalo. Jada sample and idea screening I will take 2 weeks. Chalo. Then after sensory panel and all, what we will do? Lab batch. Once you're shortlisted. Lab batch will take another 3 weeks. Depends on how you manage. Stability. Stability should not 3 weeks. That means 3 months. It is how much? 36 weeks, no? Sorry, 12 weeks.
12 weeks.
Yeah, 12 weeks. And then what you will do? Again, then you will think of pilot. Now here you can skip. Here, if you want, you can do or you can skip as well. Because your difference between the main batch size and the pilot batch size for MSME is not that much. You are getting me what I'm saying? Okay, so even if I do it for a pilot batch, I take 3 weeks and then stability, again 12 weeks. Oh, sorry, 12 weeks. And then you go your MPT, which is main plant, sorry. 1 week, because then that's a single formulation. You can add buffer of 2 weeks for raw material arrangement and all, or maybe 3 weeks for raw material arrangement if some raw material is not readily available. You buffer in that, and then a 3-month stability. 12 months. So
why we need stability, sir, at last?
Just to ensure that the product mix which is manufactured, which is going to go to a consumer, barabar na? A consumer is not going to get your pilot plant sample. He's going to get your
MPT.
Main plant sample. That's why it is important. You should be assured, 100% assured that you are giving the best quality. Yeah.
But we are already doing that stability at the row number 13, right?
Yeah, but then it's up to you. You can go with that risk. If you are confident that I am going to replicate whatever I have taken in lab scale, I can replicate into main plant scale without doing a pilot plant, then it's up to your confidence. But as far as my experience is concerned, the mixing parameters changes as you scale up. For scale up parameters are different. So it might happen that you end up with a different particle size at a main plant level.
Okay, so now when we complete the last after main plant stabilization, right? So do we need to apply for the FSSI based on that parameters?
That you have to do parallelly, na Baba.
Okay.
FSSI has to do it parallelly, na?
Okay.
So 13 months, 1 year. If
So
you
one
can
question,
cut.
sir. One question. As
Yeah.
you mentioned about the FSSI, so which is the ideal, place in this particular week section that we should start applying for the FSSI?
Particular week. Okay, in this, na?
Yeah.
So basically, good question.
Lab batch.
Yeah, lab batch. You start FSSI activity here. So there are many parallel activities you should do. So basically, packaging activity should also start. Packaging activity should start somewhere here when you're prototyping. Development of packaging, na? So
Okay.
it will take time, na, to develop the packaging. Barabar. The brand manager is here, Kavya. Is she in the call? I think she can also add.
Sir, actually, packaging shouldn't it be started with the ideation itself so that they go hand in hand, the idea and the vision to promote it?
You can do, but first of all, the inside padarth, the quality is important. Barabar? So during prototyping, I am very much concerned with the quality which is inside. Packaging can be developed later. Now we got a lot of time and a lot of options to do.
Sir,
What will happen, since you are the single owner here and you are doing it, that's okay for you. For us who work as an intrapreneur in a company, the marketing wala will say, "Arey nahi, yaar, this is not the right color, yaar, change." So most of the time goes into artwork changes and all. Okay, then there are regulatory things which you have to follow while developing the artwork. So,
Sir,
boliye.
the brand manager is here.
Bolo. Yes, Kavya, please add.
The first thing, my name is not Kavya, my name is Kavita Shetty.
Kavita. Okay, please,
Okay.
sorry. So yesterday I was calling you by Kavya name. Yeah, please add into this and do some value addition so that. Yeah.
Two, three things, sir. First of all, when I was talking that day, the prototype, let's not go into the actual packaging what you want. There are two, three reasons for that. First, your prototype is not the volume that this minimum volume that these people will ask you. Like, let's say they will say 45,000 should be your first SKU. Minimum is what we print or whatever we bottle, whatever they do. So that is not something which we want. So what we have to do, this is a jugaad. What we have to do, what is your minimum and whatever is your package which you normally do for anybody, normal, whatever you do, just put your product into that. Like, let's say if I gave the example of Bisleri. If I want a bottle, I want a pet, so give me that pet. Just for prototype, don't use your actual packaging, because there are so many innovations which are being done in packaging.
Yes.
Don't even, if you are actually coming up with an innovative packaging, then why you want to really reveal it at prototype level? Don't reveal it. Okay. Second thing, there are multiple changes which will happen in your artwork. Why? Yes, because this declaration has to be there, that declaration has to be there. Only 4 petal colors should be there, palette colors should be there, either 4 or either 8 or either 12. That is what the requirement is. Then another thing which is not being touched base, I would like to add is that when you are making the packaging, you have to take care that this is not been duplicated by anybody. Let's say with all good faith, your product becomes a hit. Then what is that one single thing that you will look at and you will know this packaging is my original packaging and the another, whatever the fake one is going on in the market, is somebody else?
Yeah.
How will you identify it?
So there has to be legal check on it.
Legal check, and you have to do something innovative or something in your packaging so that you know that this is my packaging. That can be the font of your wordings, which is innovative. You can create a new font altogether for your own packaging, something which is not found.
Yeah.
in Microsoft Excel and whatever.
Yeah.
This is IPR you're talking about?
No, this is not the IPR.
No,
This
this
is
is
the
not IPR.
artwork I am talking about.
This is regular artwork check. So every artwork has to go through a legal signature. So there is, see,
Yes.
for a MSME, that you might not follow that process, but for big companies, when the artwork is finalized by marketing, see, marketing is the guy. So Kavya will call the shot. Simple. She is leading. Simple.
Sir, again, I am
Marketing
Kavita,
person,
sir.
marketing person leads in an FMCG. You have to take that for granted. Then when if she is happy with all the color settings and all, then what will happen? It will go for legal and regulatory check. Now legal wala, what he will require, and regulatory wala, what he will require? He will require the ingredient list, which I am writing right now, and nutritional information from the R&D guy, or in this MSME, whoever who is doing it. Okay. And then that is inculcated in the artwork design. Okay. So you got FSSI artwork design and FSSI and regulatory check comes after your artwork design is done by incorporating all these things in the artwork and whatever the design is. Yeah. Color, 4 color, 7 color, XYZ. Okay. So once this is done, then you parallelly go on doing your this. See here, artwork will not be that much of an issue because you can go for a similar blank packaging, but it should have the same structure. So as I said, pet, met, pet, poly. Okay. You can go for that blank structure without printing. You can do your stability, but your final stability should be done into a printed one wala, at least the pilot wala. Lab wala, you do with a blank packaging. I will put it as blank packaging.
So why do we need a color regulatory check, sir?
Because if color leaches into your product
Migration
from
certificate.
the packaging, migration certificate, migration is there from the color.
Okay.
That you will understand during stability, na? Then you can take the supplier for a ride, packaging supplier. Show me your migration certificate. That means you have not done your testing of your laminates. Your laminate is not of good quality. You're getting me what I'm saying?
Okay.
I have a question here. Even the colors which is being printed outside will affect the stability. Is that what you're telling?
Yes, that's what migration is, na? It will migrate from outside to inside.
Oh,
If the
okay.
barrier properties of the laminate are not good.
Oh, okay.
And I would like to add from the packaging side is that when these packages actually start printing, it is not that just like printer, we get it first print itself is the greatest print.
Yeah,
No,
yeah.
at least the first 100 will go waste because the
Ideally,
initially
first it comes out to be a digital proof. That digital proof is approved.
Yes.
Once that digital proof is approved, the packaging wala sends you the actual wala film. You're getting me what I'm saying? Then it gets approved. Then it goes for commercial manufacturing.
Again, the digital print, whatever is the color, there would be variation in the.
Yes. So that has to be approved by the marketing. What Pantone shade? Is it different from the Pantone shade? All these things are there.
Okay, sir. Okay.
But once
So can the lab batch and the pilot batch be done, I mean, like parallelly, or how is it? Like,
No, it has to be done one after the other, na? Because on basis pilot plant, you will decide, na, which formulation is having a problem, na. Otherwise, if you do parallel, then what's the use? Then don't do a pilot batch. Do a main plant batch.
okay.
The objective is defeated. The objective is, see, pilot plant batch is 5 kg or 10 kg. Your main plant batch is 500 kg. If a particular formation fails in pilot plant and you don't do a pilot plant and you don't go for a main plant, your 500 kg material will go waste, na?
Okay.
Understood?
Yeah, okay, sir.
Okay. Hope you guys have understood from last 5 days and the approach for NPD in
Hi,
MSME.
Akshay.
Yes.
One thing, in case we are procuring from third party, and instead of getting it in a final boxes, I am getting it as a bulk, and I am packaging it at my own. So what liabilities do increase by that way?
Liability. See, first of all, as per FSSI, you become a repacker in the
So
first
it is
place.
I can write it manufactured and packaged by my company,
Yes.
or
See, you will become a repacker. Repacker. That's what I'm saying. You will not become the manufacturer. Repacked and marketed by
okay,
and manufactured by a third party.
okay,
You're getting me what I'm saying? That's how
fine.
it is.
So just one question on this. Nowadays, I've been seeing that there are a lot of brands who are manufacturing things outside India. Like there are few skincare companies who are doing it in Korea and then they are importing it in India, but they're selling it with their brand name and their Indian address. How does that work?
क्या वापस बोलो what they are manufacturing in Korea and
And then they are bringing it in India. They're importing in India and then उनके product पे
repacking it here ना
हाँ correct. So how does that work?
I'm only
Why we have
imported by
regulation?
information is given there. Imported by this company.
Correct.
Imported by this. They have given it, na?
So
They
then
write
they
it.
don't
They
have to
declare.
mention. Okay.
No, they declare imported from which location. That you have to declare.
Okay.
Because we import crude sunflower oil, we refine it, and we sell it in our brand. But on our, if I'm putting imported sunflower oil, then I have to
Yeah.
put the country of the location of the country that imported from Ukraine, imported from
Okay.
Russia.
Okay.
When I used to work in this FMCG, the brand wala guy like Kavya, they used to be all girls, IIM pass outs and all. They daily they used to be after my blood because they will put so much pressure on finishing the project as early as possible. The 20 to 24 months is the ideal time of launching a product in an MNC.
Sir, because brand manager is the mother of the brand.
हाँ
That's why.
so they will be daily out of after my blood. अक्षय ये हुआ क्या क्यों नहीं हुआ so that's how it is yeah so what I will do I will share this अरे sorry should I have changed okay fine I'm there so what I will do you people requested me in the chat box I can drop these files presentation I will convert it into PDF and I will give it to you you people require the Excel sheet बरोबर
Yes, sir.
so
Yes, sir.
so hold on a bit. Just guide me where I can drop this Excel sheet. I am very well versed with where is the message part here? Google Meet. यहाँ documents कहाँ डालने हैं मुझे?
So
Share
you can
docs.
also put it in the WhatsApp group.
हाँ, I can put it in WhatsApp group. Great. चलो, I will put it in WhatsApp group. Yeah.
Thank you, sir.
But the WhatsApp group, all of the people are not there, I think, na?
Those who are there, they will benefit, sir.
Okay, fine.
Everybody
Great.
should join
be
the group,
added,
I think.
right?
You
Everybody
can
should
put in
join
this
the
group, official group.
Yeah.
Or
There
you
will
can send it to the
I
administrator
will
and they
send
will
it to
mail
the
it to all of
administrator.
us.
Yeah. So I
You
will
can
send
add
you
it
the,
as an attachment.
yes. Neha Reddy, yeah, something you wanted to ask?
Oh, yes, sir. Actually, this is related to food concept. Because I'm not from the food industry, I have a concept, but I don't know how to develop it. I know you have said about the incubation centers and all, but other than the food incubation centers, is there any other medium where I can develop my concepts? Like,
Possible tomorrow afternoon.
That's right.
Hmm.
So, but today is the last class, right?
So,
So we don't know how to reach you.
my
Because
number is there na in the WhatsApp group.
Is there a second WhatsApp group?
we are not there in the WhatsApp group. Which WhatsApp group is that? Is what?
I would like to.
Even the NPD group, my WhatsApp number is there.
So most of them are not there in NPD.
नहीं दो है ना एक ये one is NPD India which I think you or someone else has created I don't know I think you have only created and then the other one is NPD which is created by the MSME wala
That is new product. That is the new product.
New product. Sorry.
NPD 15, NPD 15 is the official group.
The official group, will all these files be available, sir?
See, yes, what I will do, this presentation and those two Excel sheets, steps in NPD and the calculation wala, I will share it with Mr. कौन?
Bala.
Akash,
Okay.
Mr. Akash. Nee, Akash will share it with Bala. Yeah, because I'm not in direct touch with Bala. I'm in touch with Akash. Or that lady, some lady who was there at the starting.
Sarah.
Sarah. Yeah.
So your number ends with what is the last 4 digits of your number?
9833673079.
So
3079.
please repeat slowly.
3079. Okay.
3079 last. 4
Okay, so
digits.
you are part of the group admin. Okay.
No, I'm not the group admin.
No, but it is written 309833673079. This is group admin.
So new product development wala group. Yeah.
Yes, sir. NPD 15 is the official group. You are the group admin, one of the group admins.
So I can add it there, na? So I can directly add there. Yeah.
Yes, sir. That is the official group.
Drop it there. You are a group admin.
So I will drop all the 3 files there. Nothing to worry about. So everyone will get it. Yeah.
Okay. Thank you.
I have dropped the link in case if anyone joined that group, you can join.
Hello, sir.
What's
Okay, sir. Sir, this is Vidya. Sir, actually I missed in between a little. What I wanted to ask is, if I get my product manufactured from someone else, okay, and if I am doing the packaging, you mean I have to do the FSSI test? I mean lab test and everything again?
You have to get your product tested as per FSSI specifications once a year. Full thorough testing.
Okay. And
You
on the
rely on
label.
the COA of your third party. Third party wala will not do the COA also. I'm telling you. He will do, if it's a sauce, he will do bricks, he will do acidity, and maybe if he has a consistometer, he will do that. Otherwise, nothing he will do. Yeah.
Sir, it is once in 6 months.
In the labeling,
Once in 6 months, huh? Once in 6 months.
Once in 6 months. Yes,
Once
sir.
in 6 months. Yeah. Not once. Initially, it was once in a year.
Yes, sir.
And water was once in 6 months. Now they have changed both of them to once in 6 months. The
Yes,
product as well as water.
Okay. And sir, in the labeling also, brand labeling and FSSI labeling. So there also we have to mention that manufactured by so and so.
Yeah.
Yes.
So there is a QR
And
code. You scan the QR code. You need not write it. There is a QR code option. So you develop your QR code, and when any customer will scan the QR code, you have to mention the site, whichever it will open, your company's site, the name and the address of that person should reflect under that product. And also the batch number, you have to write that. If this is the batch number, this is the manufacturer. If this is the batch number, the code, whatever the code, VVVH, then this is the manufacturer. Yeah.
Okay.
Yes, Miss
Sir,
Tanaya. Neha.
Sir, myself Tanaya. Actually,
Just hold on, Tanaya. Neha, you can lower your hand. You please call me tomorrow for your whatever this. Yeah. Yes, Tanaya, please.
Sir, myself Tanaya. Actually, I have completed my education BTech for technology past 5 to 6 months ago. I already have my father's business,
From which
Chicky
institute?
business.
From which institute?
Shivaji University, Kolhapur.
Kolhapur. Okay, fine.
Sir, I have my father's business, which is the Chicky business from Lonavala itself. Sir, so the packaging which we make in that, it is kaju. We use kaju a lot in that. The kaju is being having some problems. Don't know, in some of the batches it is त्याला हे लागतंय, भुरा लागल्यासारखं होतंय.
Don't
In
worry.
short.
Don't worry. This requires a detailed understanding of your problems. Call me tomorrow. Don't worry.
Okay, sir. Okay, sir.
Ajit,
Thank you so
Mr.
much.
Ajit, you have 2 questions remaining from yesterday.
Yes, sir. Thank you. So I've boiled it down to one. I've combined it. So my question is regarding shelf life in yesterday's session. So what if I have a product or one or two products or more which have a purported shelf life of many years or even decades? So
Hmm.
then how can I do it with accelerated testing, or are there any other specific tests for it?
See, for means you mean to say that your product has a shelf life of 18 months or 2 years.
No, no,
That's what you
no,
mean
no,
to say.
decades together, actually.
So if it is already there, see what happens. Now, for example, vinegar.
Hmm.
Vinegar, I need not put a shelf life. First thing, though
Okay.
people put, but was acetic acid itself is antibacterial. So
Mm.
micro thing is not going to happen in that.
Okay.
Okay. So now shelf life, when you say the shelf life is from 2 points. One is from micro, other is from physicochemical. Now,
Okay.
when you say it is for decades, that means it is also not it is not getting spoiled by micro contamination.
There
Barabar?
are possibilities. There are possibilities, sir.
Then you have to check those possibilities. Via
Okay. No, but
stability,
what
you
are the
can
tests
do
for it?
it via micro robustness test, MRT, micro robustness test. What they
Okay.
do, they inoculate your sample with specific bacterial strain and they see the growth of that bacterial strain over 15 days. Basis,
Okay.
they decide your MRT, micro robustness test of your food material. You can
Mm-hmm.
contact the lab. Okay. Microchem Silicar is there who does it. Envirochem, I think, does it. Okay. You can contact
Okay.
them and get it done. Yeah.
No, but how do I extrapolate the tests to decades? I can't wait for the test to happen on years together, right?
No. It is a 15 days test, na.
Okay, so that we
It is
can
not a
extrapolate it
year's
to
test. It is
decades.
micro robustness test. The
Okay, so
lab
those
wala
those.
people, the lab people will guide you on the extrapolation of it. Yeah.
Okay. So that it can be done. Achieved.
Yeah.
Okay. Sure. Thank you. Yeah.
Okay. So I think there are no more questions. People I feel are happy with our lecture. And also one more thing, I was not able to switch on my camera because drivers of my camera were not in the computer, and also I had no time to get it installed from my company IT person. So sorry for that. I cannot show you my beautiful face. You can see it by going to my LinkedIn profile. So you can search on LinkedIn Dr. Akshay Kadam, Liberty Oil Mills. You can see me. Yeah. So that's it. So Bala, thanks for hosting this. And is anybody there from MSCB? Anyone else is there apart from Bala? Is he there, Mr. Bala? I think he's not there. Okay,
Sir, can you
fine.
share your LinkedIn profile?
Share my LinkedIn profile. Hold on a bit.
So you can send the link of your LinkedIn profile in the group only, no, sir?
Yes. I can do that. No issues.
Along with all the documents that you are sending.
Yes. Yeah.
So one more question. Can we contact you anytime we want? Would you
Yeah.
not be? Would
Contact
you
me
mind
on
it?
Saturdays.
Saturdays. Okay.
Saturdays. Yeah.
Okay, sir. Yeah.
In the second
Thank
half.
you.
If I'm not taking lecture, I will receive it. Yeah. So Mota Moti, I am also visiting faculty apart from my continued job. So I teach to ICT PhD guys and
Okay.
DY Patil, SNDT, Khalsa, and
So
all
you
of
are
them.
residing in Mumbai, right?
Thane. I reside in Thane.
Okay.
Thank you, sir. Yeah.
Okay, great.
Sir, if you require, if some of us we join together and if you have to have one kind of a Zoom meeting, will you be available at some time?
Let's discuss possibilities of it. No issues.
Okay,
Yeah.
sir. Thanks.
Yeah.
Thank you so much, sir.
Thanks.
Thank you,
Thank you,
sir.
sir.
Bye bye.
Thank you. Good night, sir.
Let's all be in
Thank you
touch.
so much.
Yes, sir.
Thank you so
Yes.
much.
Let's all be in touch so we can help each other.
Yeah,
Definitely.
Yes,
That will be
for
great.
sure. We will be needing help.
Yes.
absolutely. Thank you so much.
Thanks a lot.
Thank you, sir.
Thank you, sir. Thank you, Akshay.
Bye, everyone.
Bye.
Thank you so much, sir.
Bye.